all the way to tiles and so much more. To get started, call us on any of the numbers on your screen. You can further reach us on WhatsApp or via email. Alternatively, you can pay us a visit at plot number 5106 between Lumumba and Luasha Roads opposite FNB. Take advantage of this never-before-seen offer. Varick, your ways and means to progress and solid development.
I am Chimnyangandu.
Victoria Kayeye.
Darius Sonia.
The name is Wenson Mavor, and this is Diamond Media.
Costa is brought to you by FQM Trident Limited, a subsidiary of First Quantum Minerals Limited.
The International Monetary Fund has gifted Zambia a loan amounting to $1.3 billion. Zambia will start paying back after 5.5 years. This, however, does not mean that other loans, external or internal, have fallen off. The country is still grappling with a loan externally of $14.6 billion and about 18 billion kwacha in terms of domestic debt. In the next few weeks, Finance Minister Stumbeko Msokotwane will be presenting to Parliament the 2023 national budget. While in the past the budget was estimated, this time around $189 million is already in the budget as support from the IMF. Therefore, government does not need to panic over treasury bills and other monetary instruments to raise money for budget support. How does the banking sector react to all this? Joining me on this very special interview as a build-up to many economic issues, among them the 2023 budget and obviously Zambia's prudent and fiscal space going forward, is Standard Chartered Bank Managing Director Sonny Zulu. Sonny, it's a pleasure to have you at Diamond for the first time, and welcome back to Zambia. Congratulations on your appointment as MD for Standard Chartered.
Thank you so much, Costa. It's indeed a pleasure to be here. I've not been here in a long time.
You've been out in the UAE, the United Arab Emirates, 4.5 years. How was that experience?
Awesome experience. I think it was indeed a very good learning experience, and I must mention that there's a lot that I picked up from there. But at the same time, I must say that there's a lot that I took there, because I was in this market for a long time. I've now been with Standard Chartered over 19 years. And went to the UAE and managed to transform the business there. But I did not learn those things from there. I picked them up from here. But from that side, I think what I was able to pick up quite a lot was just their decisiveness, their resolve. And also when we come to digital migration, how that it has become completely edgeless. So it doesn't matter whether, it's Generation Z, Y, X, or even the baby boomers. It's like everybody has just taken a hold of it and they're running with it.
4.5 years, you took in your experience, you've come back with something. What are the key nuggets? And whenever I'm in Dubai, when you look around, we're just coming out of a COVID period, but they successfully hosted what they were calling the Dubai Expo of 2020.
Absolutely.
Very interesting is when you think of things like a museum, you think history.
Yeah.
But they've got a future museum.
Yeah. Museum
so thinking futuristic.
Absolutely. I think a few things that really has helped the UAE is, number one, is on leadership. They're very, very visionary and very, very resolved and determined. I think I must mention as well, Costa, that there's a little debate. When they have decided to say we are now moving the weekend from Friday and Saturday to Saturday and Sunday, and we're doing it on this day, it happens. So everybody just have to align and make that happen. And I have actually learned that when you are resolved, and you reduce debating on almost each and everything, including the things that add value, you'll be able to see progress. So from the leadership perspective, the vision is also shared with everyone, almost everybody, including the visitors. They know that this is the direction that we are going as a country. I've also seen excellency. They emphasize on that. There's a lot of, and when it comes to excellency, it is every stakeholder, everyone. So If I'm a service provider, for me to deliver excellency, everyone in the ecosystem, they have to come through. As a bank, sometimes you find that the systems are down. Why systems are down? Sometimes it's a network. There's somebody who is looking after that network, and that person also has to deliver. From the time I went to the UAE, there's never been a time when I experienced a power cut. And I heard that long before, there was a 2 minutes power cut, long before, and the head of DEWA had to be changed.
It's that serious.
It's very serious.
Excellent. Let's get back to, Zambia and bite straight into the news early, this month that the IMF had finally approved our loan, agreement as it is of 1.3 billion US dollars. Government seems to be excited. Other analysts say this is really the worst deal for Zambia as far as pro-poor policies are concerned, as far as economic stimulation is concerned. We need to brace for impact. Let's get the perspective from a banking sector. What does this IMF deal mean?
There are a few things we need to look at, Costa, which are very, very important. If you look at the level of debt for Zambia compared to the revenue that we are getting, it became unsustainable. So at some point, if I go back to 2012, 2013, 2014, the amount of debt was accounting for about somewhere around 11, 12, and it was increasing to 13, 14% of our revenue as a country. When we went to 2020, that increased to over 43%. By 2021, we had reached as high as 69, close to 70%. So meaning that for every 100 kwacha that we would get as revenue, 70 kwacha would go towards paying debt. So what would remain is only a 30 kwacha. And now that 30 kwacha, we have to pay salaries for the civil service. We have to do everything else. And it was not sustainable. So at that level, I think it was not a surprise that the country defaulted. Now, when the country defaults, you have to get back to your creditors and you have to agree how you are going to restructure that debt. The creditors, and would have different forms of agreements. Some of them probably might take a haircut to say, okay, from this, you're paying so much interest, we're now going to reduce the interest. Others may say, you know what, we are going to extend your tenure. You're supposed to have paid this date over a 7-year period. We're going to increase this to 15 so that your debt burden then is reduced. And others may actually write off part of the debt. But they will not do that until they're assured that you'll be able to manage sustainably all your expenses and the debt that you still have. Because if they do that, and then you continue contracting more debt, you continue carelessly, procuring things at a very high cost, then it doesn't help. So what this deal does is to give comfort and assurance to the creditors. Because with the IMF, when a country goes under an IMF program, there is comfort that there's going to be close monitoring in terms of expenses, in terms of fiscal discipline, and that is very, very critical for Zambia at the moment. I must mention as well, apart from the creditors, it also comes to investors, including us as banks. Because if we are going to support a project that is a government project, and I'm putting my balance sheet there, I need an assurance that indeed the government is going to pay back and they're not going to default, because there's both international debt and domestic debt. But for me to get that comfort, I need to know that indeed the government is going to stick to the plan that they have put in place. And the IMF is indeed one of the bodies that helps to give that comfort, because we know that there are now systems and structures in place.
There was so much waiting and anxiety, probably 7 years in waiting for this deal. For many, especially the general citizenry, who may not understand this, some may think that now we've hit the jackpot, now jobs will come, now the cost of doing business will come down, now the cost of essential commodities will go down. Does the IMF deal spell those things?
this has to be understood that what the country is going through is not out of the woods yet. So the country was more like in an ICU position. And when you come out of the ICU, you don't just come out and immediately, begin to run around and jump around. No, there is a recovery process. And that recovery process sometimes can actually be painful. Because if you continue making the same mistakes that were made, that landed us in the position where we are in at the moment, we are actually doing a disservice to ourselves. So we need to be prepared. So let me talk about inflation, for instance, because that is one of the questions that is always getting asked. And a lot of our clients come to us and say, inflation is coming down. How come I'm not seeing the price of goods coming down? I think one of the things that have to be understood is the base effect. So when we are talking about year-on-year inflation, we are comparing the price of bread now compared to the price of bread last year. Now, if we look at last year, if the price of bread had gone up compared to 2020 by 32%, so inflation last year would have been 32% because we are comparing price in 2021 versus 2020. Now, if the price of bread now has moved by 5%, the inflation that is going to be 5% doesn't mean that the price has gone down. No. But compared to the price of bread in 2022, compared to 2021, the increase has only been 5%. So it is the slowing down the rate of increase. So that is what, when it comes to inflation, that is what is happening at the moment. And it is actually moving in the right direction. We should be able to see that as this trend continues, then it becomes more sustainable because most of people's incomes probably may not have increased as much as the rate of inflation. But when it comes now to generally just on the economy itself, I think we need to be more productive. With the IMF deal coming in, it is helping us to reduce the impact, to reduce the burden of servicing the debts. The government will now be getting those resources and pushing them into production because we need to start producing. There are certain things that were almost like on a standstill because they couldn't be done. But now that has to go into production. What does that mean is that it's not only the government. It includes all of us. How do we participate as a private sector? How do we help to create more jobs and more jobs into the production sector? As I am giving out loans, people are getting those loans. How do they get that money into production? Because if they're getting the money only to consume, that drives inflation again. If they're getting the money only to consume, our productivity as a country is not going to increase because if we look at the status of either it's a poor country or, medium, income country, it is productivity per capita. So you and me, how much are we producing? And if we take everything that the country is producing divided by the population is growing. If our productivity is not going up, then our productivity per capita remains very low.
Very low if you compare to even countries within the region like Botswana and so
Absolutely.
on. We are very low. But I'm happy that you talk about private sector, you talk about productivity and so on. The biggest thorny issue for those in really the private sector, SMEs and so on, that we cannot invest and inject capital into our businesses using commercial banks such as Standard Chartered for two reasons. One is that government was crowding out, they say, the private sector because the commercial banks, found it more secure, less risky to lend T-bills and T-bonds because it's government, rather than go to a risk Costa who you're not sure whether his small Kantemba will pay back is a high risk. Secondly, barrier to entry factors in that our lending rates are quite high. But we see government also calling on you, the commercial banks, to say that the MPR has been stable for quite some time. Reduce. Why are we not seeing you reduce your lending rates?
Fantastic. So let me start by the good news. We have reduced our lending rates, and I'm very, very happy that, and that was a massive, massive reduction. So if you look at mortgages, for instance, we moved from 24.5% to 16%. And, in my history of banking, even being in Standard Chartered before, we had never reduced rates like that. So that was a bold step that we decided to take on personal loans as well, from over 29% to as low as 23%. Again, that was a bold step that we took. Now, having said that, I believe that more can still be done. However, a few things have to be put into consideration. So if I may just share in terms of, how we're coming up with setting up, our interest rates. As a bank, if you imagine that I'm starting from scratch, how do I open the bank? I'll need capital. And how do I get that capital? I'll get equity. And I'll come in, I'll get from, Costa, I'll go to somebody else and say, can we put our monies together to meet the minimum capital that we need for us to be able to open the bank? Now, when I'm getting that, you are an investor. You need a return on that investment because you had an option. You could have put the money yourself in T-bills or anywhere else, but you have chosen to risk that into my bank. That is not for free. You need to get a return. And when you're thinking about a return, you'll be comparing to say, wow, if I had put this money in bonds, for instance, remember bonds had gone as high as 25% plus. If I'm giving this into Bank Sonny Zulu and Sons, it should give me a return that should actually be higher than, the 25% because Sonny is actually risky. If I go on the other side, this is risk-free. So that is equity that I have. At the same time, I am now going to also I could actually raise debt as well. So I can go and borrow to be able to have enough liquidity for me to be able to create loans. At the same time, I am getting liabilities. These are now deposits. Now, the depositors as well, there are two types of depositors. There are those that are coming on a current and savings accounts, and there are those who are bringing in term deposits. Now, current accounts and savings accounts, because you can withdraw them very, very quickly, the interest rates are very, very low. But when you look at term deposits, these are fixed. So a term depositor will also say, why should I put my money in the bank when there are other options where I can get higher rates? And that's why you find that on the term deposits, the rates are usually much, much higher. Now, when I have all of that, where am I getting the interest to pay all these depositors? Where am I getting the interest to actually, the profit now to come and pay you as an investor? I have options. One of the options is, let me give out loans. Now, if I'm giving out loans, I have to price them higher than what I'm paying because in there's a cost, there's so many things. So there has to be a margin that I'll put there. And that is what then pushes that price up.
So well explained and from a business point of view, yes, there must be profit, there must be return on investment for the equity, holders. But then, Sonny, what is the whole purpose then for commercial banks if they do not exist for their customers, especially in an economy like ours where the engine, the backbone, we can't run away from it. It's private sector, it's the SMEs, and we need banks like yours to catalyze this growth. I mean, job creation, effective businesses, government will get taxes. That's the way the economy will oil itself. So if we create high interest rates as barrier for startups, how do we grow the economy?
No, see, absolutely right. So it's the entire ecosystem, right? So it really begins with, and that is why even when you look at, this IMF program and the decision that the government is taking, the direction that they're taking now, is actually moving towards bringing down interest rates. Because if the government is always in the market, always borrowing from the market, what is happening? The interest rates are going up. Now, with what we are seeing now, the government is very, very clear. They're reducing on coming in the market to borrow at high rates. As that is happening, the interest rates are indeed coming down. And like I've already said, I mean, we have taken that step. The entire industry, there's no question, there's no doubt that interest rates will continue to go down. That is expected.
Did we see, obviously, during this time of debt and when we ended up defaulting, your loan portfolio from private sector going down, as commercial banks? And did this stimulate appetite for government bonds? Were they really lucrative and worthwhile amidst this period of debt? Did government have the capacity to really pay?
Yeah, so, Costa, when there's a default, the impact goes beyond what we often talk about, because the sovereign risk is actually increased. So if, for example, there is a parastatal that is, working on a big project, we know that as long as it's a parastatal, there's a sovereign risk on that. So if I'm going to extend my loan facility to that parastatal, what it means is that I am actually extending to a very risky name. Because remember, the government has defaulted. So what then begins to happen is when it comes to returns, because remember, the analogy I gave, or the example I gave, you are an investor who has entrusted me with your equity. The way now I am, deploying that into the market, if I am deploying it to a risky company, the returns must be higher, because then, the default rate becomes much, much higher. So in that process, what we saw actually was that a lot of the financial institutions, they began to relook at their portfolios, and the returns on the risk-weighted assets then we are becoming much, much lower, because when you are really calculating your returns on risk-weighted assets, you are also looking at probability of default. And in some cases, some names, you couldn't actually even lend to them because it was just, impractical to be able to do that. And the last, I would say, probably 1.5 years, probably 2, it's been very, very challenging to continue growing the loan portfolio. But with what has happened now, we are seeing that turnaround and moving in the right direction. And not only extending loan facilities, but extending loan facilities at a lower interest rate.
As banks, obviously at the center of economic activity, putting a bird's eye view, because you've got an array of customers. Still on the issue of productivity. Yeah. If we're saying this IMF deal will pull out government, hence the banks have a bit more resources to give into private sector and SMEs and further reduce the interest rates. The other angle here, Sunny, is the conditionalities attached to this IMF, deal that sort of press on the cost of doing business, removal of subsidies on petroleum products, which means petrol prices go high, the cost of doing business becomes high. Removal of subsidies on fertilizer, the cost of agricultural, inputs. We can't run away from the fact that agriculture seems to be our only future to drive this economy, food security, and away from non-traditional exports. Again, even our mining sector is not doing so fine on the copper belt. So are we plowing, this money, or is this whole economic recovery heading in the right direction?
I would say it is. And what I would say, Costa, is our eyes should not necessarily be on the 1.3 billion. And when you think about 1.3 billion, to be honest, it's not so much of a lot of money.
Compared to the debt we have.
Exactly, compared to the debt we have. It's that is helping to cushion. What we should be really looking at is now the economy is opening up. How do we all participate? All the different industries, those that would not even be able to get financing, today they are able now to get financing. And that is actually very helpful, because this country risk rating, even from external financials, they look at Zambia and they'll say, what is the credit risk of Zambia? And any company that is in Zambia, because it is the whole ecosystem. Today, Costa, just to give an example, right? If you look at domestic debt, the government is sitting on over
89 billion.
Exactly. Now, that debt, this is to SMEs. This is to companies that have supplied to the government, meaning that their liquidity is locked up.
And banks have been raining on them.
Absolutely. You know what I mean? Now they have to grow, they have to move, and they cannot because they don't have the capital, they don't have the working capital to be able to continue. They're waiting for this payment to come in. So the engine needs to be oiled, the economy needs to be oiled. And with these plans that are there, even the debt dismantling program that the government has put in place, I know it will not happen overnight. And to be honest, I know it's a very, difficult thing to say. Probably if there was a lot of money, maybe they would have paid it all and it goes away. But that one also is for us to watch.
Sonny, I love the point you raised because on one hand, we are saying this IMF deal helps us, restructure with obviously the Eurobond lenders, the other multi-lenders at an international scale. There's not so much talk about domestic debt. I mean, if you talk about 89 billion and one looks at the 2022 budget, we allocated 2 billion out of 89 for debt dismantling. So I'm thinking about our mine suppliers. They've been owed, government suppliers, retirees and pensioners. How do we unlock this?
There is a plan, and I must mention because I've cited that plan. So the government has come up with a plan which I've reviewed, and this is a plan where they're looking to dismantle this debt over a period of 5 to 6 years, and there's a prioritization that has been given in there. If I look at that plan, I would say probably maybe 10 to 11 or probably even up to 12 billion might have to be paid almost like each and every year. But there is a prioritization because in that date, it also includes what is owed to individuals, what is owed to companies, and so forth and so on. And the reason why I was saying I love the plan which is staggered because it will also help on inflation as well. Because Costa, if that home money was released into the economy on day one, you know what happens. Once you increase the liquidity, inflation goes up as well. So we have to plan. And even when that money comes in, what it becomes very important is for us to take it into production.
But the big question is, especially with you, the commercial banks, yes, you're in business and you've been described as compromising because it's an ecosystem like you say. Now, I know of people who've done roads, people have done huge projects with government, RDA, NRFA, and the mines. But because of this crunch for government, there's debt, so they've halted, they're not paying, they're not investing into any projects. And I had come to you to finance because I've got an order, I've got this contract. So you saw that and you financed. But my time to pay has come, government is not paying me, the mine is not paying me. Who is my IMF? How are you, the banks, thinking about your customers when such happens really?
Great. So this, we have to all work together. And that is why, for me, it was very important to look at that debt dismantling paper or document that has been prepared. Because one of the commitments in there is that government is not going to allow accumulation of debt going forward. Because to get back to the scenario that you just gave, you are being owed and you don't have money to put into your business, and you've got contracts. You need to do that contract to deliver and execute that. And you come to the bank. Now, I know you don't have money. I know you're being owed. So at the moment, without any change, if nothing changes, I'm saying, if I give Costa and company money, how is he going to pay me back? Because he's being owed somewhere else, he hasn't been paid, and there's no assurance. I'm talking going backwards. But with the assurance that are there now is going forward, there will be no more accumulation of new debt. If you're going to contract anyone, ensure that you're actually paying that on time. So at that point, then we're able to say, listen, Costa, I know you have, money that has not been paid to you. What I'm looking at is this project that you're doing here. Who is actually the beneficiary? Now, if it is the same people who have not paid you, what is the assurance that you go, I give you my money, you put in this project, and you're actually going to pay me back?
That's one side of the coin.
Yeah.
The one I wanted to refer to, Sonny, is one where government has given me a project. It could be a road.
Yeah.
Or Mopani has given me a contract. And to execute that contract, I come, you do the due diligence, and you back me up with a loan based on that, and I begin to service. But as happens now, government is in this debt, they start defaulting, so they are not paying me while I still have a loan with the bank. Or as things are, there are cases like that where I know employees, say for example at Mopani or KCM, got loans from commercial banks. But because they're not drawing any salaries, they've got no IMF to talk to Standard Chartered on their behalf. And so bailiffs and things rain on them. How do we help? We've heard, for example, even companies that were offering invoice discounting, banks also. You can't do that anymore because my penalties, my interest still goes out while I'm still being owed payments.
So there's quite a lot of debt restructuring that happens, and as banks, we do that as well.
It's happening?
It's happening, and we do it both at individual level and also for corporates as well. The one thing, Costa, that is very important for us to also acknowledge is as banks, we don't necessarily focus so much on the collateral or the security. And I will say it here, that banks, we are so bad when it comes to selling security or the collateral that we are holding, because that's not our business. So let me give an example. If you have given maybe a property, real estate as collateral, and then you default on your loan, to get foreclosure on that property takes a long time. For me to, when I get possession of it, I'm not going to keep it like that. I need to put security there. That's a cost on my end. Then I need to start the advertising process of selling that property. And sometimes, by the time I'm trying to sell it, the market value is actually below what you are owing. So we can go through that. Somebody can come in and say, Sonny, I own Fintech house. I just need a small loan of whatever, maybe it's 500,000, and Fintech house is worth much more than 500,000. Now, if you default on that, where am I going to start from selling Fintech house? And who is the buyer? And so on. So that process itself would take very long. By the time I'm finishing, I've spent even much more than the 500,000. So what we really look at is, if I give this money to Costa, what is his turnover? What kind of business does he have? How is he going to ensure that it's actually paid from his primary source? And the primary source is exactly the, where you did your cash flows, you did your income statement and said, this is how I will manage. So when you are doing the due diligence, I look at all of that in detail. And when I get comfort that Costa, this is the source of income, and for this tenor, he's going to manage to pay back, then the collateral is only a backup to say if this fails, then we will be able to default to that. Now, when you default as well, we sit down and we say, this has happened. And that's why we always encourage our clients to say, when you are seeing yourself getting into a place where you're going to default, don't disappear, don't run away. Come to the bank and come and sit down. And many, many times we do this. Sometimes the bank can actually give you a payment holiday. They can say, okay, we understand, we're going to do this. And if everything else has failed, that's the point now when we go now to look at the security and to say, how do we liquidate this?
Let's move on to looking at banking relatively, in general. We're still regarded as an economy as a cash society. When you look at the turnover of money exchanging hands in Soweto market, Chisokone, on the Copperfield, and so many, it's like, people really are allergic to banks and the banking, system. What really causes this? The last I checked, our penetration numbers in terms of banking, we're still sitting below, 25%, if I'm not mistaken. It's been really moving slow, Sonny. Why isn't banking so attractive with the economic benefits it has to the general citizenry?
I think that is changing, Costa. That is changing. And for me, that's where I see that with the digital strategy, that is really transforming the face of banking. And we have seen it for ourselves. So just to give a sense, I will talk about Standard Chartered, and then I'll talk about some of the market statistics as well. So for Standard Chartered, at one point we had 24 branches. Even before I went to, to the UAE, and I was managing those branches. And at one point, we reduced them to 18, and now we have 3. At the time, we were only reaching our clients in the locations where we had our branches. And if I look at the numbers, we are opening about 700 accounts across the country per month. With our digital strategy, we are now reaching clients across the country. We have accounts being opened from all the 10 provinces, districts that some of them have never been to, but my customers are opening accounts there and have got customers there. That is happening using the digital strategy. And these accounts are being opened within a few minutes, less than 10 minutes, in some cases 5-6 minutes. An account, working account, is actually opened. If we're talking about financial inclusion, if we're talking about bringing more people into the system, the digital approach is one that is very, very affordable, very convenient, and will help us to get more people into the banking system. What have we seen? Now, we're actually opening over 2,500 accounts on a monthly basis that we never thought would actually be able to open. And these accounts are actually increasing. We have customers, in Chilubi Island. One of them was just calling us the other day, was activating the card and so on. And this is something that we are seeing happening. The other one as well, which is so important, is that with the digital banking, the cost of banking goes down.
But the bulk of these new customers, yes, guaranteed, they are now jumping onto the banking platform. What do you see? What are the majority opening these accounts for? Most of them is basically to receive, a salary. Nothing much happening on these accounts in terms of activity?
Not necessarily. In fact, Costa, I always say that when we talk about financial inclusion, that has been the focus in the past. Like, okay, you have an account and that's it. You're financially included. And I'm saying no. Financial inclusion is for you having access to the financial products and solutions that you need at an affordable rate. And I'll repeat, the financial solutions and products that you need. Because in some cases, you have an account. What can you do with that account?
Is Standard Chartered offering that?
Absolutely. Absolutely. So if you look at our platform today, we have got 72, now even more than 72 service solutions that one can actually be able to do on your own. And all of these in the past, it required the client to actually come into the branch, stand in a queue. We talked about productivity earlier, and that kills productivity. If you're going to spend time in traffic to go to the bank, where you are struggling, first of all, to find the parking, and then you find the parking, and then you go inside, you wait for somebody to come in, and they help you, and then you go, what time are you going to work? And most of these are things that can be done within a few seconds. Now, I know that the question always comes in to say, are people ready for it? From what we have seen, Costa, it is an amazing uptick. And it was the same. Remember when we started with our ATMs, people would leave there, would actually avoid coming to the ATM. We were having people sitting by the ATM just helping people, this is how you use the ATM. And then afterwards, now the ATMs, people are queuing up on ATMs.
I'm happy because we're talking this digital transformation.
Yeah.
Also what we're calling it is Fintech.
Yeah.
And you really answered the question I was going to ask. The brick and mortar traditional banking from 17 branches to 3 only.
Yeah.
Others would be crying job loss, and the big question will be, what is the future then of banking as we know it?
Well, the future of banking is really transforming. If we look at the models that we have seen, and some of these still on their way, and they're coming because we have seen this in many markets where we operate. So there is obviously the traditional banking where we have the incumbents. We have seen also digital banks coming in, and these are newer banks. And at one time, it looked as if the digital banks were more like a threat to the incumbents and the big banks. But now what we have seen is that most of the incumbents have actually adopted the digital approach. Some of them have come up with their own digital bank within the bank. Some have actually changed the name. Others is exactly the same name. And we have seen these everywhere across the world. So that direction, there's no question that people are moving in that direction. And we are also seeing that there are also different models where you have got banking as a platform, you've got banking as a service, and banking as a marketplace. So if I can just break that one down, we have seen chain stores today where, for example, they have a loyalty program. So think about any chain stores. I'll give the examples that we have in Zambia as an example, whether it is a ShopRite, it's a Pick and Pay, and so on. On their platform, they actually come in and have a banking service. So it is the engine, it is the bank that is registered, that is regulated, but all the customers who are clients and on the loyalty program of that particular chain store are able to have that service. Also the other way around, where we say on the banking platform that Standard Chartered, for example, has, we bring in other service providers because banking then becomes a lifestyle. It is not just to say when you go to the app, you're only going there to do banking. If you're going on the app, you're going there to do life, which includes everything else that you do.
Let's just nip it in the bud there. Banking becomes a lifestyle. I want us to really interpret this.
Yeah.
You talk about, you mentioned earlier that certain players came within fintech, and let's mention it's the mobile network operators or the telcos.
Yeah.
People are now on, Airtel money,
Absolutely.
Mobile money,
Absolutely.
or MTN, which is Momo, or Zamkwacha.
Sure.
Can we describe this as banking? Because I think these platforms are being used basically to suck cash out of the economy, but people can use the e-platform or the digital platform for me to pay for a service or a product through phone to phone. Can we call what is happening as banking, or it's basically transactions?
No, it's part of the ecosystem, Costa. It's part of the ecosystem. And for me, for example, from Standard Chartered, I look at the MNOs as partners. And if you look at some of the platforms that we have and the solutions that we have, we're actually working with MNOs. So our corporates today, they have got beneficiaries. Some of them, like, say, 1,200 beneficiaries in some place in Western Province. They need to pay them. How are they going to pay them? And some of these do not have accounts yet. So I've developed a platform where the corporate goes in there, just puts in all the mobile numbers of these beneficiaries. At the click of the button, they all have money in their accounts. I was not able to do that, but I am able to provide a solution to my corporate clients that then goes and benefits all these individuals who are also being serviced by the MNOs. So if you look at it as an ecosystem, everyone plays a role. And that is why even when it comes to access to finance, today there are certain customers that I may not be able to reach myself. But you know what? You come up with a microfin, I will give you money from me, I'll give it to you, and you go and distribute it because you have the capacity to do that. So on the digital front, I think this is all coming together. And one of the things that we have seen as well, Costa, is the adoption has been amazingly, amazingly impressive. So sometime in 2016, we had about 39% of payments happening by checks. I'm talking about in this market. Mobile money payments were only about 2%. Talking about 2022, mobile money payments have increased to about 43%. Guess what? And checks have gone down to 2%.
And back to your issue when you say the future of banking and the fact that there was this notion that the MNOs or fintech companies or pay platforms were causing a threat, to the existence of commercial banks. I'll still ask that because we've got a similar, issue within the media sector, traditional media versus, online and social media, platforms. You call it as an ecosystem.
Yeah.
Is it a component of adaptability? Do you see this ecosystem really working and gelling together that you coexist?
It does, and it's working so well, Costa. So you see, by the end of the day, we have more people and more money coming into the banking system because this money that we are seeing today, even going through mobile wallets, before it was not in the system. Now remember, when the MNO introduces that facility, that money is not sitting somewhere in the air. It's sitting in the bank. So there are trust accounts that are opened, and these are opened with banks. So when money now comes into that system, not that it is sitting with one of the banks somewhere, and there's a mirror between what is on the banking system and what is on the virtual wallet. And that we are seeing that then it helps even to mobilize more deposits because then there's more liquidity, and when there's more liquidity, then we can be able to deploy it into the productive sector.
There was a concern. I attended a fintech discussion, last week on the fact that fintech and digital online solutions have sort of moved so far ahead than banks, and hence are more attractive, and you're a boring, entity to deal with. For example, somebody was giving an example. Yeah. I mean, why should you be asking me in your KYC my bill, my physical address, when on the online platforms is just my number, and we're up and running and we're doing business? How are you adapting? Are some of the things that you required in terms of this bureaucratic due diligence and KYC still necessary in the advent of fintech?
Yeah, so look, there are some minimum things that are required, and I think that is where you see now the difference between banks and non-banks, because banks play a significant role when it comes to ensuring that financial crimes are kept in check, terrorist financing is kept in check, and they are regulated, and there are certain things that are actually required for you to be able to, and that's why you have some thresholds when it comes to any other transactions that may have like KYC light requirements, because at a certain point we all have to ensure that is protected. Now, there are a lot of solutions that are coming to help with that. Number one, there's a topic that I've really been hammering on and pushing on, and that is the digital ID. When the country gets the digital ID, most of these KYC requirements and asking Costa to come and provide, this ID copy and everything else goes away. And I've worked and lived in markets where that is working. At the click of the button, you can pull out all the information from the national database, and that really, really helps out. And I know there are efforts to do that. I wish those efforts could move much, much quicker, and we are doing everything we can to be able to support those efforts. But coming to all the fintechs and all the work that is ongoing today, there is another aspect, Costa, that is very, very critical. And I know many times, with limited time, it's difficult to really address this, but there is a gap when it comes to the skills that are required even to take the industry to the next level. So what has been happening in the past, Costa, is you would have a department called digital banking. You would have a department called technology. So you have these people that are so clear. They understand that. But guess what? They're not business people. So when you're talking about anything to do with risk-weighted assets, with a return on capital, when you're talking about things with funds transfer pricing and EVA, which is economic value add, the IT and the digital guys may not actually come in sync. When you talk about, the products themselves and everything else. Now, if you leave the IT teams, you go and sit with the product team, yes, they will understand the product, they will understand the service, but they are nowhere near understanding the technology that goes in there. And how does this actually translate, this transaction? How does it actually move? Even just a simple transaction, what is happening behind all of that? What we're beginning to see is that going forward, there should be no place that is called this is a digital department. It's like when we started opening companies in the past. We had a computer room. I worked in the mines, in the early 2000s, where in our office there was nothing. It was just plain. And if you want to do anything, you go to the computer room. Now the computers are here, and that's exactly the same when it comes to technology. In the palm of our hands. It is in our hands.
And I love that we will be concluding just on the future and just the disjoint that you mentioned. And I want to mention or just highlight one disjoint. It's from a regulatory legal framework. Technology has gone so fast, we're now talking of fintech, but beyond that, there's crypto and all this. And the commercial banks, are still regulated under the Banking and Financial Services Act of, I don't know, number something, which looks at your capital reserve, like you rightly put it, the famous 25 principles of banking and how, you follow those. So it's how you're running and how, but yet on the other side, what's happening on the market is that tech has moved so fast. Yeah. So when we look at the next 5 to 10 years, do we have regulation to protect the consumer in a cyberspace when there are countries now that are considering crypto when we live in a global environment?
That's a very good point that you've raised, Costa. And I must mention, I'll start first of all by acknowledging that globally, I think that's an issue with regulation sometimes coming in slower, lagging behind the technology innovations that are happening. I think what we have seen in Zambia is that the regulator acknowledges that, and they have been very, very supportive. And in some cases, we have received approval even to be able to test certain things that may not today have any provision in the Act or in any of the regulations. And they would actually ask just to ensure that there is comfort that what we are doing is still safe, we are protecting the interests of the clients, and in some cases then they begin to work on the regulations that are required to make sure that then this becomes acceptable and within what is provided. Now, having said that, it also comes back again, like I mentioned earlier, to this upskilling ourselves and reskilling ourselves, because Costa, this cuts across. It cuts across the legal fraternity around accountants and bankers and everything else. Today, we have to upskill ourselves, because if I go well ahead, I implement things, but my internal auditor has remained behind. My risk person has remained behind. I'll be trying to implement something. He says, no, you cannot do this, because he's still thinking the old way of doing business, and he has been left behind. And what we have seen, which is I'm very, very happy, our regulators here, they have been actually going forth. I'm happy there's a discussion today around virtual assets, digital assets, and how those can be regulated, because that is the future. We have got people investing in crypto, young people. We are also looking at things that when you talk about financial inclusion as an example, you have somebody who is allowed to start working at a certain age, but then they are not allowed to access financial services until. So how are they going to manage their financials, because they're earning, an income, or they're doing a business? They cannot open an account because of age. They cannot be able to access certain loan facilities because of age. So certain things like that become things that need to be looked at and ensure that how do we ensure this inclusion is really, practical and is helping to get more people in. So from a regulation perspective, I must mention that, yes, there is work to be done, but the regulators have been very, very forthcoming. Discussions, for example, on open banking, which has taken forth in many of the markets, those being discussed, and we have to move very quickly to be able to have regulations to allow that to be happening in our markets.
Sonny Zulu, thank you so much for being so insightful and informative in this interview on a number of issues. It's always good to talk to an old, brother and colleague. And congratulations once again for coming back home and heading Standard Chartered Bank.
Thank you so much, Costa. And lastly, just to say that Standard Chartered Bank is here for good, and we are here to stay. We've been here 116 years. We're going to be here for another 116 years.
Brilliant. That wraps up the special interview with Managing Director Sonny Zulu of Standard Chartered Bank, Zambia, and obviously discussing, among many issues, the IMF deal and Zambia's, debt. Obviously, how does that spur into productivity in the private sector? And obviously looking at the future and positioning of banking adaptability amidst the era of fintech and digital online banking. Remember that you can catch this exclusive on our YouTube page, it's Diamond TV Zambia, and also log on by subscribing onto the Airtel TV app. It's subscription free, and you can catch the live stream. Thank you so much. Good night.
Costa was brought to you by FQM Trident Limited, a subsidiary of First Quantum Minerals Limited. Valusaka, Vakopala. Let's move parcels and make extra something by registering your motorbikes with Twenshe Courier. For more information, send an email to info@twenshe.com or call 0978 928 595. Sign up today and download the Twenshe application on your smartphone via the Google Play Store or the App Store. So Valusaka, Vakopala, here's a chance to make an extra something. Terms and conditions apply.
Hello, no one is available to take your call. Please leave a message after the tone.
Mr. Tembo, I have the building material has come in, so we are just waiting for the money. Mr. Tembo, I know you are there. Can you just pick up?
Daniel, I've just got off the phone with ZNBS and I found out that they have amazing loans for the building materials that you wanted. So just head down to their offices and find out more.
With ZNBS, you can now get a building materials loan at competitive interest rates. All you need to apply is a ZNBS salary account or a stop order account. For details, visit any of our branches. Call us on 0211-228146 or 230896 or email mortgage@znbs.co.zm. Or you can visit our website on www.znbs.co.zm. Like us on Facebook or follow us on Twitter. Terms and conditions apply. Zambia National Building Society. Shelter through savings.
ZNBS.
Batata, you're here. I thought you said lunch.
Oh, come on, my son. I cannot wait to see my first ever grandson.
As a young modern wife, entertaining my Wapongoshi was always a mini nightmare. But today, I'll treat them to a special traditional secret. Tata, Maya, Moisen.
Oh, thank you very much, my daughter. This Bemba woman really knows how to prepare this chibwantu. Exactly like from southern province. Please give me some more.
Times have changed, but some things in life shouldn't. Introducing Amasip Sip Chiwantu traditional maize drink. Traditional taste that has stood the test of time.
Last time I had such nice chibwantu was at home. Prepared by my mother.
Amasip Sip Chiwantu, a taste of local tradition. Trade Kings, improving.
Help stop the spread of COVID-19 by avoiding unnecessary movements. Did you know that with Madison General Insurance Company Zambia Limited, you can buy insurance from the comfort of your home, office, or anywhere in the world in 5 easy steps? Step 1. Visit online.madison.co.zm and select the product of your choice. Step 2. Under motor insurance, select Get a Quote. Step 3. Enter vehicle details and validate your KYC with a one-time password to proceed. Step 4. Make payment using mobile money, bank transfer, Visa or MasterCard. Step 5. Print your certificate of insurance on standard white A4 paper. It's that easy. But wait, there's more. Thanks to MGen's integration with the RATSA online system on buying your insurance from MGen, your insurance details are instantly uploaded to the RATSA system, enabling you to buy road tax immediately. Madison General Insurance Company Zambia Limited, your award-winning digital insurance provider. Avoid unnecessary movements. Buy insurance online. MGen, it's worth it.
Sound the drums.
Feel the rhythm from all around the country.
This October, prestige is status.
Excellence is fame.
Honor is eminent.
The annual Kwacha Music Awards are back for the 4th edition on October 1st, 2022.
At Mulungushi International Conference Center. 1900 hours.
Red carpet at 18 hours.
Tickets available at CompuTicket and ShopRite outlets nationwide. Charges are $150 Quattro Terraces, $300 Quattro Standard, $1,000 Quattro VIP, $2,000 Quattro VVIP. Premium charges apply thereafter.
Nominations courtesy of radio stations across the country.
Sun FM Quattro Music Awards. Prestige, excellence, honor.
For the kind of entertainment that grabs all your attention, we got you with MTN Netflix bundles. Just dial *117# and select Home and MiFi bundles to purchase Netflix bundles for your router or MiFi.
Are you looking to go for movie nights this September? Then for only 135 Kwacha Antenna Classic and 140 Kwacha G-Smart, get the best and latest movies on TNT, ST Movies, Bollywood, plus more to experience over 100 movies right in the comfort of your home. But wait, enjoy all love, friendship, and family affairs in our dramatic series and a new compelling La Vida Lena, premiering on Wednesday, 14th September, every day at 20-40 hours on Novella E+. Thereafter, take your summer entertainment into First Division 1 games every weekday live on ZMBC TV3. Also remember, no sporting weekend is complete without the flair of the Bundesliga. So catch all your favorite players, including Africa's best Sergio Mane, every match day live on World Football. So get yourself a Topster decoder. Download the StarTimes own app and link your decoder now. Topster, enjoy digital life.
One thing I've learned about beauty: true beauty starts from under the skin and works its way outwards. It took me a while to realize that I don't have to constantly struggle to cover up dark spots, allergies, dryness, or any other skin condition. Thanks to the natural goodness and herbal wonders of MediHerb Ayurvedic soap with 18 herbs, my skin now has a hydrated, healthy look. Say no to ordinary and gift your skin with MediHerb soap.
It's easy when you do it like this.
So fresh when you do it like that.
More fun when you do it like this. But even better when you use Aloha.
It's clean when you do it like this.
Looks good when you do it like that.
So much fun when you do it like this.
But even better when you use Aloha.
Life throws at you, make it fresh and fun with Aloha range of products. Aloha, make fresh fun.
Get the best of local TV on GoTV for just 30 Kwacha. Current affairs on Prime TV. Lifestyle shows on Diamond TV.
Parliament sessions on Parliament TV, news on Camnet TV, entertainment news and local music on Power TV, news on ZNBC TV 1 and 2, City TV, CBC, and religious programs on Emmanuel TV, Go TV Lite, Niyamoyo. Enjoy all your favorite shows in one place now for just 30 kwacha per month. Go TV. Love it.
Shake and sip down in your soul. What you waiting for? Come on, let's go. Shake and sip. Get up and show me how to shake and sip. Get up off your feet.
Shake things up with Shake and Sip Fruity Milk.
Shake and sip.
Go, go, go.
Every moment you be in the zone. Shake it up, shake and sip. It's the way to
Shake
go.
and Sip, when fresh meets fruity.
Help stop the spread of COVID-19 by avoiding unnecessary movements. Did you know that with Madison General Insurance Company Zambia Limited, you can buy insurance from the comfort of your home, office, or anywhere in the world in 5 easy steps? Step 1. Visit online.madison.co.zm and select the product of your choice. Step 2. Under motor insurance, select Get a Quote. Step 3. Enter vehicle details and validate your KYC with a one-time password to proceed. Step 4. Make payment using mobile money, bank transfer, Visa or MasterCard. Step 5. Print your certificate of insurance on standard white A4 paper. It's that easy. But wait, there's more. Thanks to MGen's integration with the RATSA online system on buying your insurance from MGen, your insurance details are instantly uploaded to the RATSA system, enabling you to buy road tax immediately. Madison General Insurance Company Zambia Limited, your award-winning digital insurance provider. Avoid unnecessary movements. Buy insurance online. MGen, it's worth it.
We want fruit top when we're all around. We want fruit top when we're having lunch. We want fruit top. Nothing else will do.
We want fruit top when we're hanging out. We want fruit top when the sun is out.
Fruit top, share the happiness.
Great moments are best shared over Fruit Top Fruit Juice Squash. Fruit Top, with the real fruit in every drop.
OneXBet! Reliable bookmaker with high odds. Wide selection on events. And bonuses for every taste. OneXBet. Easy use, easy win. Register with promo code and get a huge welcome bonus on your first deposit.
Hello, no one is available to take your call. Please leave a message after the tone.
Mr. Tembo, I have the building material has come in, so we are just waiting for the money. Mr. Tembo, I know you are there. Can you just pick up?
Daniel, I've just got off the phone with ZNBS and I found out that they have amazing loans for the building materials that you wanted. So just head down to their offices and find out more.
With ZNBS, you can now get a building materials loan at competitive interest rates. All you need to apply is a ZNBS salary account or a stop order account. For details, visit any of our branches. Call us on 0211-228146 or 230896 or email mortgage@znbs.co.zm. Or you can visit our website on www.znbs.co.zm. Like us on Facebook or follow us on Twitter. Terms and conditions apply. Zambia National Building Society. Shelter through savings.
on this episode of In the Cut.
So you actually worked with Sunonny Zulu.
Sunonny Zulu released a song called Junior Luala before mine, and then they never pushed it.
If KP was paying you for the time that you're using to make his music, you'd have made it. Yo, what's up? And there you have it. My guest today, Abraham Piri, aka Mr. Dab. I'm so excited